Oyez, oyez. Anyone having business before the King's Justice of the Superior Court of Justice, attend now and you shall be heard. The Honorable Justice Hennessy presiding. Long live the King. You may be seated.
Good morning, all.
Good morning.
Good morning, sir.
Morning. Good morning, sir.
And good morning.
I wonder if you could please turn to Exhibit 38, which is your main report. And if you could go to page 52, which is part of your instructions.
Oh, sorry, page 52?
Yes. Page 52 on the top right-hand side. And there's a heading for inclusion in your report. And I want to focus on paragraph C, as in Charlie. And I'll wait till you get there.
I'm sorry, what page are we on? I'm just,
Okay.
It's in the, if you're in your report, page
Right.
52.
I'm sorry. I see, okay.
All right, so at page 52, there's a heading for inclusion in your report. You see
Yes.
that?
Yes,
And it says, please ensure that your report includes the following. And it references a rule of the courts. And at item C as in Charlie, it says the instructions provided. You see that?
I see that.
And if you look at the scheduling, you see the heading scheduling on near the top of the page.
Scheduling, your report is due June 30th? Is that-
Yes.
Yes,
So when did you receive your instructions?
I don't recall offhand.
Is it fair to say you received instructions prior to June 30th, 2022?
I just don't recall. I'm sure the date is in here somewhere. I just don't recall the exact date.
Well, did you receive instructions in writing or just over the phone?
I know that we have instructions as of July of 2022. I just don't recall what date I received instructions.
You just don't know.
I just don't know.
I'm going to suggest to you, sir, that the instructions that are attached are dated July 11th, 2022,
Yes, that's what I thought. Yes.
and that's a date after your report was due. So I'm suggesting that there was some instructions you got before the July 11th, 2022 letter.
Well, that's possible. I can't answer your question. I know that I've got the letter from July of 2022. And I don't have any other date for which I received instructions.
How long did your work take you to do, to prepare this report? How long did it take?
Quite a long time.
A week,
Absolutely not.
a month,
Oh, way more than that.
5 months?
Yeah, probably 5 or 6 months, I would guess, at least. Yeah.
Okay. Now, I just note at the front of your report of Exhibit 38, it says the report is dated July 14, 2022, which is 3 days after July 11th, the date of your instructions.
Right.
I'm suggesting to you that there must have been other instructions you received because you didn't do all the work without instructions for 4 months and 27 days.
Oh, absolutely not. I just can't tell you the date.
But there were other instructions.
There must have been.
Okay. You don't know what they were?
Not offhand, no.
You don't know how they differed from the instructions that are in the exhibit 38?
I don't recall, I don't recall instructions changing, no.
All right. Do you recall discussions about what the instructions are?
Yes, we would have had discussions.
And would those discussions have been with people other than the Department of Justice?
Absolutely not.
Just the Department of Justice lawyers?
When you say other people, who?
Oh, I mean like specific claims people or ministers, someone other than a lawyer.
Oh, absolutely not.
You say you don't think that the instructions changed, but the only way we would know is if we had your earlier instructions, right?
I'm sorry, I didn't hear your question.
You say that you don't think the instructions changed, but we wouldn't know unless we looked to see what the earlier instructions were.
Yes, I think we would want to compare them. You're right.
Can you go to page 48 of your report, which is part of your instructions? At page 48, towards the bottom in the paragraph just before the plaintiff's experts reports,
Yes,
it says information regarding the court's expectations of compensation due to the First Nations is available from the court's decisions. See in particular paragraphs 271 to 325 of the Court of Appeals decision. You see that there?
I do see it.
Now, you would agree with me that nowhere in your report are any of the reasons of the court referenced in any way. Would you agree with that?
Sorry, which case is this? This is the Court of Appeal of. Let me just. I'm just gonna read the preamble, okay?
Yeah, sure.
All right, okay.
I'm going to suggest to you that the instruction letter tells you that you can get information about the court's expectations of compensation by looking at paragraphs 271 to 325 of the Court of Appeal decision.
I see that, yes.
Would you agree with that?
Well, that's what it says, yes.
And I'm going to suggest to you that nowhere in your report do you make any reference to the Court of Appeal decision. Would you agree with that?
I agree with that.
You did make one reference to the judgment, I'll grant you that, but not to the reasons.
Right.
Mr. Schachter, can you just tell me on page 48 where you read from, please?
Yes, I read from the first paragraph prior to the heading, the plaintiff's experts reports,
Oh, I see.
starting
Thank you.
off with information regarding the court's expectations.
Thank you.
Yes. Am I correct in understanding, sir, that the reason why you didn't make reference to anything, any of the Court of Appeals reasons was because you thought they were irrelevant to your task?
Probably, although I think I would like to read it again. I'd have to read it to confirm that, but they probably were not relevant to what I was doing.
If you go to page 50 of your report, at item number 1, and this is part of the assumptions you were instructed to make, you see that?
I do.
And you agree that that's part of the assumptions?
Yes, I do.
Is it fair that to say that you were only instructed to bring forward a share of the NCRRs?
The only thing I worked with was the NCRRs that I was given.
You were not instructed to look into bringing forward any kind of historic loss based on the value of the treaty territory that the Anishinaabe brought to the table in 1850?
Are you talking about the liability of some dollar liability assumption? I just want to understand your question, sir.
Yeah, my question was, in your instructions, and by instructions, I mean both the ones that appear in the report and any previous instructions you may have received orally or
Right.
through a different letter. Am I correct in understanding that you were not instructed at any time to look into bringing forward a historic loss which was based on the value of the treaty territory that the First Nations Anishinaabe brought to the table in 1850?
So these are a different, you're giving me a different set of liability assumptions. Am I correct?
Well, I'm just asking you if you received those
Your
instructions.
question, I can't relate to your question because
Mm.
I was given a set of NCRRs to work with. Now you're asking me if was I given another set
Yes,
of liability amounts to work with? No.
thank you. Now, I wonder if you could go to your SIR reply, Exhibit 39, and I have a question about paragraph 3 of your SIR reply. At paragraph 3 of your SIR reply, you reject the 60-40 investment scenario put forward by Stiglitz and Hutchings. Is that true?
Yes, in the application of this matter, yes.
All right. And as I read paragraph 3 of the SIR reply, you first identify that this approach, that's the 60-40 approach, right,
Yes,
violates the most basic proposition in finance, which is that higher rates of return go hand in hand with higher risk. There is no free lunch.
right.
In other words, this is a complaint that the 60-40 scenario ignores the risk of the investments. Is that fair to say?
That's right.
The second complaint, as I read paragraph 3, the 60-40 approach, and this is using your words now, ignores the risk of the investment and the return that was actually expected. You see that there?
Yes, I do.
First question I have about the second reason is you say actually expected by whom?
Yeah, I'm gonna let Professor Booth address this paragraph 3.
Well, I would prefer, if you know the answer, that you address it because this is your report.
I understand it's a joint report, but repeat the question then, please. Thank you.
In paragraph 3, you identify a second reason why the 60-40 approach is in error, and you say that it ignores the risk of the investment and the return that was actually expected. And my question was, who are you referring to when you say was actually expected?
Actually, expected would be the investor.
So that would be the Anishinaabe? Or who are we talking about when are we talking about the Anishinaabe, the Indians, or are we talking about Canada?
I just don't understand the question. I'm sorry.
Okay. One of the complaints about the 60-40 proposal, and you've now clarified that it isn't consistent with the return actually expected by the investor.
Right.
But that begs the question, who's the investor you're referring to? Are you referring to Canada being the investor, or are you referring to the First Nation being the investor?
Be the First Nations investor.
Thank you. Now, on what basis do you say, what did you look at to say, to examine what the First Nations expected?
Okay, again, I'm going to leave that to Professor Booth, but I'm going to refer to my opinion I gave in another matter, if that would be helpful or relevant at all.
Well, you're free to answer the question in whichever way you think is
Okay.
helpful to the court. And
So I wrote a report in what was called the veterans case. So these were World War I veterans who came out of World War I suffering from various forms of shock, ended up in veterans hospitals, and generally were comatose. There was a pension accruing on their behalf. And eventually a class action developed because the government did not pay interest or invest the pensions. Somebody asked for their pension and all they got was their pension. So I was asked my opinion of how the investment should have been made. Okay, how the fund should have been invested. My opinion was that the appropriate investment was treasury bills. Why treasury bills? Any risky investment, in my opinion, would be wrong because, first of all, you couldn't get the know your client information about the client because they were comatose. You couldn't interview them to find out what they wanted. And secondly, if the money was put into risky investments and those investments lost, it's hard to imagine that the government wouldn't make up the losses. It would be essentially giving the investors a free ride. So my opinion was that that the appropriate investment was a risk-free investment, treasury bills.
So you equate the situation of the First Nations in this case with the same kind of risk tolerance that a comatose veteran might
No, I
have?
didn't say that at all.
I'm
saying-
asking if that's what you're saying.
That's
That's
not
what
what I said, no.
You still haven't answered my question, though. My question was, what did you look at to decide what the Anishinaabe, the First Nations, expected by way of rate of return? And you answered it by saying, I looked at the veterans case. And you know that you compared it to the veterans case, but what about the veterans case and this case? Is it all similar?
I think I'm going to have to defer to Professor Booth on this one. Okay.
You have to answer the question if you know have an answer, or if you know an answer. If you say you just don't know, I guess that's one way of not answering the question, but you have to, if you know, you have to tell the court.
Okay, I'm gonna, I just don't know.
What you did just tell us, though, is you have to know your client. That's important.
Yes,
And yesterday you talked about developing something called an FPX index.
right.
And I thought I would take a look at that. And I have brought up, and you should have a copy of an article in the National Post authored by Eric Kirzner on November 2, 1998.
Oh, okay.
Do you remember that?
Well, I will as soon as I look at it.
All right,
I'm
take
sure
a
I
moment.
wrote
I'm
it.
sorry, I thought it was on your, in front of you already.
No, I just received it.
I'm not sure we have to mark it just yet. I just have a couple questions about it.
Okay.
Do you remember it now?
Sure I do. Yeah.
This is the work that you did. And I want you to look at the last paragraph of the first page, and I'm going to read it to you. Or sorry, before I read it to you, what you developed was 3 different indices that people could use. When I say people, I mean investors, correct?
That's right.
This is in the 1990s.
That's correct.
I appreciate that. And you say each, and this is what it says at the bottom, each index uses an assumed portfolio of $100,000, an amount representative of the average investment portfolios of National Post readers. That's the only portion I want to read. So the 3 indices that you developed were for the market of people having $100,000 in November 1998. Is that fair?
That's right.
And the 3 portfolios, there's a growth portfolio, a balanced portfolio, and an income portfolio.
Right.
And in terms of knowing your client, some people with $100,000 in 1998 should invest in the growth fund, right? You would recommend that depending on their circumstances.
Depend on their circumstances. Yes.
Now, what circumstances would one look at to want to invest in an FPX growth fund?
Well, you'd expect investor who was had at least good investment knowledge, had moderate to higher risk tolerances, had growth objectives. Yes.
A long-term investor would suit a growth investment, yes?
Yes. Yes.
Now, your growth investment has 70% equity and 10% cash and equivalents and 20% fixed income,
Right.
correct?
That's right.
Now, if I was to ask you to assume, remember, this is a hypothetical, that the judge finds that the Anishinaabe in this case were long-term investors with a high risk tolerance. Is it fair that you would recommend a growth type of investment that is consistent with your FPX growth fund?
It's a reasonable question, sir. I'm just going to ask you to put it in a particular time frame. Are you asking me about 1990, or are you asking me about 1850? That's all I'm.
Okay, well,
You understand? Yeah.
let's start off with 1990.
Yes.
So that's the time frame. Would you agree with me then?
Okay, so just to make sure that I've got I understand your question. If Her Honor concludes that the bands had a high risk tolerance,
Yes,
were long-term investors, had a
Yes.
long investment horizon,
yes,
and that they had good, at least good investment knowledge, which would all be part of it. Okay.
yes. Are there other factors that you would, you've mentioned 3. Are there other factors that are important?
Well, I mentioned investment knowledge. I did yesterday as well. Risk tolerances, objectives, financial circumstances are all factors.
Okay,
Assuming that all the factors fall nicely into place, then in 1990, a growth type portfolio might be suitable.
how about in 1952 when Mr. Templeton started his investment funds? Let's push it back to
1952
52.
would be, you know, I based these indexes on my studies of rates of returns up to 1990, 1996. I'd have to go back in 1952 and do a similar study to see what I would come up with in 1952. Okay,
Yeah. All right, you haven't done that.
well, I'd have no reason to do that right now unless you ask me to.
Okay. Well, I'm not gonna retain you to do a study.
Yeah.
No. Maybe I can ask the question this way. In 1850, if there was an investor with a long-term horizon who could invest in the market, I'm not asking you to assume that they could invest in the market. They had a long-term horizon. And they were looking to, were prepared to take on risk. Okay. Would you agree that that type of investor would be suited to investing in equities?
So number one, in 1850, so you asked me to assume that the markets existed for them, that they had
Yeah,
access to
yes,
those
yes.
markets. So that's important, okay?
Yeah, it's
So I'm
very
gonna- so I'll
important.
accept your assumption that they had access to the markets or they had access to someone who could get them into the markets.
Yes, I'm asking you to assume that.
Okay. So once again, I'm gonna go back to my, if they had moderate to high risk tolerances, they had at least good investment knowledge, they had a long investment horizon, they had appropriate financial circumstances, they had investment experience, then those are the characteristics that you would look at to see whether a equity portfolio was suitable for them, on the assumption that they had access to the.
Okay, so I need to understand why you think investment knowledge and is important for an investor. Why, if you're hiring an independent person who knows their job, why is the investment knowledge of the
Investment knowledge
investor?
is,
Why is the investment knowledge of the investor important? And
it's absolutely critical, and I've testified to this in many cases. In order to understand, in order to say that you have high risk tolerances, in order to understand your objectives, you have to have investment knowledge.
so a person or a First Nation that wanted to make sure that the monies that they received would last and benefit 7 generations, that's not enough knowledge?
No, they'd have to understand risk. And to understand risk, you have to have good investment knowledge. You have to understand that prices rise and fall, and that you could have a 30% decline in the value of your investments. You'd have to understand that you would know that you could withstand that, and that you wouldn't panic or do something foolish.
So
And that's that whole behavioral side is also critical.
how long did it take you to learn that principle? Where did you learn that?
Interesting. Well, I started studying and applying investment finance around 1968, 1969. I read some very important books. I opened up accounts. It took me quite a long time to really understand what
3 years, 5 years?
I think it probably took me 5 to 10 years to really solidify what the factors are for making good investment decisions and what represents suitability.
Thank you. Could you turn to compendium tab 3? Now, this is exhibit M, as in mother. the compendium at tab 3, I just pulled off the the internet.
This is the one you gave me yesterday.
Yeah, it's
right?
the one I gave you yesterday.
Yes, okay, sorry.
Now, this brochure is about the Canada Pension Plan. Correct?
This is tab 3? Yes, okay. I'm there.
Yes.
Okay,
And if you go to, again, I'm going to refer to the pages on the bottom right-hand side of each document. It's 7 is where the document starts, and I want to refer to page 8. That's page 8 of the compendium of tab 3, which is page 2 of 12 of the Canada Pension Plan document entitled entitled CPP Investments, How We Invest. And I want to refer to the second paragraph. Are you with me?
with this approach, that.
Yeah,
that-
that's
yes,
the one.
Okay,
You see that?
yes,
The second sentence says, and this is the CPP speaking, not you. I appreciate that. Our goal is to achieve sustainable returns over the long term in the best interests of the contributors and beneficiaries of the Canada Pension Plan, CPP. And then they say, in structuring the portfolio, we maintain a long-term view.
right.
They maintain a long-term view for many people. Sorry, the Canada Pension Plan maintains a portfolio for many people who don't have investment experience. Is that true?
Oh, certainly, yes.
And go over to page 9. At the top of the page, it reads, our role is to invest the funds of the Canada Pension Plan to help ensure that it can provide benefits to Canadians over many generations. Because we don't have to sell investments to meet our obligations, and because we have a reliable income stream due to ongoing contributions, we can look beyond regular economic cycles when making our investment decisions. This ability to look well beyond the short term, one of our comparative advantages, means that we can benefit from opportunities in ways others can't. We can take advantage of short-term market dynamics and hold assets whose rewards may take longer to emerge. Did you watch the testimony of Professor Stiglitz and Mr. Hutchins?
Yes, I saw some of that, yeah.
The point that is made in the Canada Pension Plan brochure is the same point that they made about taking it, that Professor Stiglitz made about taking advantage of the fact that they're long-term investors. Would
I
you agree?
don't entirely agree with the wording of this, okay?
Oh, you don't
So
agree?
Let me explain.
Sure.
So how does a pension plan work? It has a pension promise, it has beneficiaries, it has contributions that are made, and it has a pension payouts. It uses actuarial tables. It has to use everything in order to determine what an appropriate stream is. A pension plan can, no matter how well it's structured, can run into a rough period. Can go into a period in which markets, both bond and stock markets fall. It's unusual, but it can happen. And it can mean that the pension plan can become underfunded and either has to increase the contribution rate or reduce the payout. So it's not quite as simple as the way it's described here.
All right. So you disagree with the Canada Pension Plan. I got it. Okay. Maybe the next paragraph will allay your concerns. Under the heading accepting volatility, in contrast to most pension plans that have short-term obligations or funding requirements, the sustainability of the CPP fund is less vulnerable to volatility of both asset prices and current returns. Our long horizon and certainty of assets means that we can prudently tolerate and absorb short-term changes in investment values and look through market cycles. And it continues. The advantage of this is that, comma, over the long term, comma, the benefit of higher returns progressively outweighs the impact of higher short-term volatility, period. So we can be patient, comma, flexible investors who can take a higher level of long-term risk while also benefiting from volatility by capturing opportunities that arise during market downturns. Does that perhaps address your concern about pension plans being underfunded?
No, there's no question the CPP plan is much larger, very well managed. Given its nature, it's less vulnerable to market fluctuations, but it's not invulnerable. They don't say that they're invulnerable. They say that they're less vulnerable to volatility. So listen, I'm a fan of the CPP. It's well run, but it still can run into a period in which it will be unable to fully meet its obligations. It can happen.
All right, perhaps we can go to page 16 of this document, which tells us the investment structure for the CPP. And they have, under unitized core pool in the middle of the page, they have 85% equity and 15% debt risk equivalents. See that in the middle of the page?
Yeah, it's 85 balance and 15% alternate assets, as I read that.
Well, it says 85%/15%, and beneath those numbers, it says equity/debt risk equivalents.
Yeah, so debt risk equivalence is what they call absolute return strategies, which sometimes are absolute return and sometimes are not.
So the 15% is for, what did you call it?
Absolute return strategies.
Absolute return strategies, and the 85% is for the equity?
No, 85% is in a combination of equities, fixed income. Looks like. Well, maybe not. No, maybe it's diversified portfolio. I'm just trying to read it. Diversified portfolio of equities, fixed income. No, it's like, no, you're right. It looks like it's an 85-15. Sorry. Yeah.
85 equity
Yeah,
and 15%
Sorry,
other.
it's yeah.
So that's what's appropriate. At least the Canada Pension Plan people think it's appropriate for Canada Pension Plan, and I'm not asking for your opinion whether you think it's appropriate.
Okay.
Now, you mentioned in your direct testimony that you have some experience with the Canada Council for the Arts.
Yes, I served on their board for a few years. Yes.
Right, and if you look at tab 4, I've produced the financial statements for the Canada Council for the Arts. And if you go over, please, to go to the page I want to refer to, just a moment. Page 30, bottom right-hand side, that's 30 of the compendium. There's notes to the financial statements, and on the left-hand column, it says the council, that's the Canada Council, manages two separate portfolios. This is the second paragraph. The Canada Council Endowment and special funds, as well as the Killam Fund. The Killam Fund will requested that their donation be invested separately. And the amount in the funds looks to be about $114 million.
Right.
So you were involved in investing those monies for the Canada Council on the investment advisory board? Is that what it's called?
I forget what it was called, but I was certainly one of the advisors, yes. Well, I was one of the, I was either a director or a council member. I forget what my exact title was, but.
And so if you look at just before the heading number 5, financial risks and fair values, there's a reference to the statement of investment policies and goals approved by the board. It's in the paragraph just above 5, financial risks and fair value.
Okay, are you referring to the council invests in units of equity fixed income pooled funds? Is that,
Sorry, I didn't get that.
or,
No, on the left-hand column, do you see a number 5 there? At
Oh, I
page
do.
30 that says financial risks and fair value?
yes,
The paragraph just before that starts with, and I'll read it, the council manages its portfolio to the following benchmarks as per the statement of investment policies and goals approved by the board.
yes.
Did you help draft the statement of investment policies and goals?
I have to tell you, after serving for a few years, I resigned from the Canada Council from the Arts. I did not agree with their investment strategy. They understood why I disagreed. And I felt that they were not adding value, that they were underperforming the indexes. I had recommended an index strategy. We debated it. And when they refused to adopt an index strategy, I resigned.
And when did you resign?
It should be in my, whatever the tail end of my tenure is in the CV is when I would have resigned.
Okay.
I think it was around 2014, I forget, it was amicable, but a difference of philosophy.
So I appreciate you were not on the board then at the time. But have you, over the evening, did you read over these financial statements at all?
I read this, yes.
Yes. And as I read it, they are investing in index funds now, aren't they?
Now, they may be investing in index funds, but they're not pursuing an index strategy
Oh,
that I can see.
okay. Now, let's take a look for a moment what they, and I guess it's not you, but it's they. I thought maybe you may have been involved in this, but they consider an appropriate investment for 114 million. And if you look on the right-hand side, on the right-hand column, would you agree with me that they have 70% in equities?
Yeah, can you just direct me where you're looking?
Page 30, top right-hand side of the page.
At present, so they have minimums, benchmarks and maximums, but it looks like the benchmark, the target is 60% and it looks like the current is 70. The way I read that.
So when you say the target, where do you see the target being 60%
Well, I see the
equities?
benchmark of 14
What's
to
that?
46. Yeah.
I'm sorry?
I see I see a minimum, I see a benchmark, and I see a maximum. And I think the benchmark is their target.
So the target is 60% equities.
Yes,
But right now they have 70% equities.
that's right.
All right. And if you
So
look at,
I'm having a hard time finding this possibly just because of the print.
yeah, if on the, yeah, I'm sorry that.
Am I
the
looking at
print-
a chart on the top right of page 30?
Yes, that's exactly where we are.
Okay.
And if you add up Canadian equities and global equities, let's look under the
I see it.
column market value, 18% plus 52% is 70%.
Got it.
And that's the current situation,
Right.
but you've just made the point that the benchmark, or what you said, the goal is 60% made up of 14% Canadian and 46 global equities for a total of 60%.
Right.
And the range in the investments as to what's appropriate for this organization is anywhere from a minimum of 50% equities to a maximum of 75% equities.
That's right. That's right.
Thank you.
And by the way, you know that the middle column, the benchmark is the target because it adds up to 100. The other, the minimum and the maximum will not add to 100 because they're ranges.
All right. And if we look on the left-hand column again, 2 paragraphs above it, above the one I read about the council managing its portfolio, you'll find the following words. The long-term objectives of the Canada Council Endowment and Special Funds, as well as the Killam Fund, are to generate long-term real returns to supplement the costs of administering the various programs while maintaining the purchasing power of the endowed capital.
Yes, now, since this is an endowment fund, it does have to pay out a certain percentage each year.
Yes,
So that's not, that should be mentioned there, but it doesn't seem to be, but.
And where did you read from, Mr. Shacker?
I was reading from the left-hand column, the 1, 2, 3, 4th paragraph down from the
Got it.
top.
Thank you.
So if the fund were to have a bad year and still, but would still have to pay out 3.5% as in the form of an endowment, then it might have to change its policies. That's all.
Right. But with that being their objectives, the asset mix we've talked about, we'll call it the 60% benchmark in equities, is a suitable approach.
Yes, I agreed with the asset allocation. When I was on the board, it was a strategy I disagreed with.
Okay. So I have a couple questions now, sir, about how the Anishinaabe in this case might have used the collective annuity augmentation monies had they been paid each year. So first question is, would you agree with me that when a group like an Indian band starts receiving significant revenues, and let me just use an example, oil and gas revenues.
Okay.
Extracted from reserve, right? The reasonable and appropriate and rational response upon receiving that money is to develop a financial plan?
Possibly, depend on what they wanted to do. Maybe they wanted to invest in education and housing and other social investments immediately. Maybe they wanted to build a financial portfolio. It would depend on what they wanted to do.
But if you're getting a lot of money, isn't the first thing to do to sit down and develop a reasonable, appropriate, and rational financial plan for the
I
use of
think
the
we
money?
would sit down and develop a reasonable and rational investment plan, which would include both financial and real investments.
would you agree with me then that developing a financial plan includes one, developing investment plans, but you also has to develop spending plans as well? Would you agree with that?
Investment and spending, yes.
I want to put a hypothetical to you as an expert in the economics field. Did you assume that when a significant annuity augmentation monies had come in the past, the Anishinaabe in this case would have sat down to develop a financial plan? I'm asking you to assume that.
Oh, okay.
And I want you to assume as well, then that when they sat down with an advisor, they explained that their goal was similar to an endowment fund, which is to invest the funds to generate a sustainable withdrawal for present and future generations. That's an assumption, only an
No, no,
assumption.
I hear you. And are we talking about, we're talking about a time frame starting in 1850 and just going on year after year. It's
Yeah. Yeah.
Am I right?
I'm just, the money's coming in
Okay,
and it's substantial. Maybe the first year, they don't know that the second year will have similar monies, but from the NCRR, significant monies did start rolling in each year. You agree with that?
okay,
Yes?
yes.
So under the hypotheticals, would you agree with me that the Anishinaabe would be considered long-term investors?
Based on your
Hypothetical.
hypothetical, that if their plan was to build something that was comparable to an endowment fund, which is what you asked me to assume.
Yes.
In order to build an endowment fund, you have to live in both the current and in the future. You have to build a portfolio that is equipped to make the 3.5% or 4% or 5% payout that you're planning for the endowment, and at the same time grow the assets. So it's a fairly, it's complex, but it's quite doable. But that is the approach you would take. But it's not just long term. You also have to make sure that you're managing the short term, because you're making the 3.5% or 4% or 5% payouts each year.
Would you agree with me that for long-term investors, similar to an endowment fund, investing at least 60% in equities is a reasonable investment strategy?
It depends on where you put the other 40, but most endowment funds do have, certainly current ones have 50, 60, or 70% equity exposure, yes.
Would you agree with me with the statement that over the long run, the higher return achieved by investing in equities reduces risk to the investor who is a long-term investor?
Over the long term, investing in equities, assuming that there's no behavioral action on the part of the investors, assuming the investor stays with their investments, does not panic during a period such as 1930s or 1970s. Simple buy and holds are not as simple as they sound, but assuming they did, there's no question that over the long run, equities will outperform bonds.
Wasn't my question. It wasn't about outperforming. If you're a long-term investor and you have the ability to hold on and not sell, buying equities actually reduces the risk to the investor. Would you agree with that?
The risk of what? I don't understand the risk. You say the risk to the investor, which risk?
The risk to their capital.
Well, that's, I think my previous answers is the way I would answer that they would perform better over the long run with equities rather than bonds. Which means that they're.
Well, maybe I can look at it
the
this way.
No, the safest way to preserve your capital is to stick it into treasury bills, and then nothing bad can possibly happen. So It doesn't reduce, the way to reduce risk is to put everything into treasury bills. I wouldn't want to do that, but, so that's why I can't answer it the way you position it in terms of.
Okay.
Of
Maybe I-
reducing risk.
Maybe I can try it this way.
Okay,
Let's position ourselves in let's just say 1860. Okay, 1860.
okay,
It's 1860. And you have an investor who's a long-term investor who talks to their investment advisor, and their investment advisor says, you want to get the best return you can get, but you want to minimize the risk in doing so. And would the investment advisor be correct in saying, because you're a long-term investor and are investing for the long term, the higher return achieved from investing in equities actually reduces your risk. Reduces your risk in comparison to investing in government bonds.
I'm gonna slip a couple of words into your answer and see if this is, it reduces your purchasing power risk. The purest way to reduce nominal risk is to put it into treasury bills or put it under a mattress. Okay, that's the safest. If your objective is preservation of purchasing power over the long run, then indeed you would want to invest in a fairly high equity portfolio, assuming, as we've said, that you can withstand all of the volatility in the marketplace.
Okay. Perhaps we can move on. Let's look at compendium tab 5. At paragraph 159 of the reply report of Joseph Stiglitz and David Hutchings, they wrote, another reasonable but less conservative approach would have yielded far higher numbers. A principle noted earlier in this report is that funds invested in an endowment or sovereign wealth fund should be invested entirely in equities, because over the long run, with the proceeds of such funds accumulating in all contingencies, the fund would do better doing than investing in bonds or a mix of bonds and equities. Do you agree with that statement?
You'd lose all your flexibility. Your assumption is that you're in for the long run, that nothing happens in the short and intermediate run. So if you put everything into equities and you ran into a period in which, I mean, the worst that equities have ever done is they've fallen 92%. Okay, from 1929 to 1932. Okay, that was the worst, only happened once. But there certainly have been periods in which equities have fallen by 20, 30, and 40, in fact, 45%. 2008, 2002. So you lose all flexibility if you're in 100% equity portfolio. If you want to do something, if you want to make some type of spending, if you want to make some type of social investment, if you want to make payouts to people. So 100% equity portfolio.
You wouldn't agree with that?
Would only work if you've got an absolute Rip Van Winkle, buy and hold, go to sleep, wake up 100 years later and you're fine.
How about waking up 174 years later?
I'm prepared to wake up 169 years later under those circumstances, assuming that nothing happened in between.
All right, but getting back to paragraph 159 of the Stiglitz and Hutchings report, if not 100% invested, if they had put in 60 or 70%, would you agree with it,
Sorry,
their
what,
assessment there?
Which,
Well, like you're taking issue that it wouldn't be right to invest 100%, and I'm just saying, so if they had said 60 or 70% equities, that would make their statement correct?
so which paragraph are we looking at?
Paragraph
now?
159,
Oh, we're still on 159.
we're still on 159.
But instead of 100%, if they said 60 or 70, and so
Yes,
principal knows are in this report, it's funds investment some should be invested, okay. So rephrasing what they said. An endowment or sovereign wealth fund should be invested 70% in equities to go over the long run with the proceeds of such funds culminating all.
I'm sorry.
Again, assuming that you met all of the, first of all, that you had the access to the markets, that you had investment knowledge, that you had all of those factors that you need. And that you weren't concerned about short and intermediate term events that you may not be able to meet if there was volatility. Yes,
thank you.
I'm just going to remind you, sir, although it's a great back and forth between you two, the reporter has to get everything you say.
I apologize. I have been speaking a little too quickly.
Okay.
Well, I don't know if this is going to help the reporter, but what the witness was reading out, he was actually reading out paragraph 159.
Yes, thank you. I just have to get where he's reading and I have no sort of reference, that's all. And I can put it in after, that's fine.
Okay,
That's
all right.
my concern.
So I want to move to a different area. And we've only been going an hour, so I think we can go a little bit more. Dealing with the method, some of your methodology that you dealt with. And I think the first place we want to go to is paragraph 85 of your report. I'll wait till you get there to paragraph 85. Are you there?
I'm there, yes.
So it identifies that we retained Ernst & Young, EY, to review a sample of banned trust account summaries from 1880 to 1957.
Right.
I don't see a letter as to what samples were sent over to Ernst & Young. Can you help me? What was sent over to them?
I don't recall how. I simply talked to Ernst and Young and said, these are the years that I think we should use. And I may have gotten their advice as well. In terms of finding the 16 most robust bands for use.
All right. So Ernst & Young is the professionals that prepared the data set to inform your work?
They're the ones who prepared which, I'm sorry?
The data set to inform your
Yes.
work.
Yes,
You then write in paragraph 85 that since there were a large number of bans spanning multiple years, we decided for the sake of efficiency and with the guidance from the Department of Justice to use a representative sample. See that?
yes.
When you say we decided, who's we?
That was essentially me.
All right.
Yeah.
You decided for the sake of efficiency. Why does efficiency matter in this case?
Well, there was just a huge amount of data. just to make this, tractable, we just decided to use a sampling approach.
Sorry, you said to make it tractable?
Well, to make it doable in a reasonable period of time.
All right. Were you under a
And
time?
also, I didn't know what was gonna come out. I had to see what results we got, whether they were able to work with this, and which they were.
You mean if the results were different, you may have changed your approach? I don't
No,
understand.
if Ernst and Young had called me and said, can't work with this, it's not working.
Sorry, you said when you used the expression, we decided for the sake of efficiency to use what you call a representative sample. You said the we is actually you.
The we is actually me.
So you decided for the sake of efficiency. And want to just sort of try and understand this a little bit better. You wanted to be efficient and because there was so much data, you said. Now, if you, in the fullness of time, you could have actually gone through all that data and actually used actual numbers instead of what you say is a representative sample, right?
Could have sampled all, could have used all 34 bands, yes.
Okay, but you didn't do that.
No.
And you said that you made that decision with the guidance from the Department of Justice. That's what it says.
That's right.
So the Department of Justice influenced what you looked at in terms of your data set. Is that right?
I don't know if influence is the right word. I certainly discussed with the Department of Justice the approach that I thought was a reasonable one, and Department of Justice agreed.
Well, you say here that they gave you guidance.
Well, they're the ones who pay the bill, so
Yes, indeed.
Right.
You also say it's a representative sample, but you didn't do any statistical analysis to determine if it was representative or not.
No, I had discussions with Ernst and Young. I said, okay, take a look at the other bands as well, the ones that we aren't using. Do they look radically different? And it's more of an eyeballing approach. I agree. It was not as scientific as might have used if you had a long time period, but we concluded it was representative.
To be fair to you, sir, were you under time pressures to prepare this report?
I don't remember the time pressure, but I knew that I didn't have an unlimited amount of time. No.
Can we bring up then on the computer spreadsheet 1, trial exhibit 1-2105, which you identified yesterday in direct as a sheet that tells you we can identify for the years you looked at some of the spending. Does that document look familiar to you?
Yeah, that's the Ernst and Young work. Yes.
Okay. And this document, exhibit 1-2105, is schedule 1 in your report, correct?
Yes.
And under column A, you see the word or the letters YEA, and then it's covered up with an arrow. Do you see that there?
Yep. Yes.
So I'm going to ask Ms. Lewis to just click on the arrow, and because that'll just show you all the years that you can select. And these are the years you looked at, right?
Yes.
All right, we're going to,
Can you tell me how to get there?
yes, if once you get to the to 2105, exhibit one.
Oh, it's there.
It-
I thought I might find it in the report. It said schedule 1 in the report.
Yes, the schedule 1 in the report was only provided electronically. These tables, as you can appreciate, are Excel spreadsheets, and they're
I
impossible to
understand that
print out.
they're double alphabets
Yeah.
wide.
Yeah, in some instances, that's correct, which is why I have to do this on the computer.
Got
I can't easily do it in paper and put it in the compendium, lest the compendium roll out to ZZ. All right. So the first point I want to make, I want to go over to column on the right-hand side under the heading I think EY, so it'll be in G or H or something. EY, yes, column I. So column I was Ernst and Young's justification and explanation.
Okay.
Most of these are blank. Does that mean that Ernst and Young had no justification or explanation for how they classified an expense?
I thought they didn't have to.
They felt they didn't have to.
Yeah.
So the judge wouldn't benefit from knowing what their rationale was.
We'll look at H. Oh, okay. So-
Yes?
Yeah.
So let's, whatever we've got there, that's just, it says illegible text. And let's just take one, for example. Let's follow the illegible text to the left. The full description per support is illegible, illegible text. And there's let's use, it says consumption, $2,442.86. Consumption, illegible text. And go to the right, please. And Ernst and Young didn't feel they needed an explanation or justification as to why they called that entry consumption.
Well, they'd seen the word consumption.
No, they've classified it as consumption. The description is illegible text.
Okay.
Doesn't that cause you concern when you looked at this data set?
I remember discussing it with them, but I had given them large number of items that I thought should be classified, that I knew should be classified in certain ways. They we had a bit of a give and take. They brought up some additional items. This may have just been the way they designed the spreadsheet, but I don't recall a problem.
They are the ones that did the work classifying the expenses. You didn't do that.
They did the actual classifications, yes.
Thank you. And let's go over, staying with this same row. After EY justification and explanation, which is blank, there's a column J that says requires confirmation, discussion, yes or no. Not as I looked through these tables through Schedule 1, I didn't see very many yeses or nos. Either it requires confirmation or discussion, or it doesn't. If it's blank, is that it maybe requires discussion, confirmation? What does it mean when it's blank?
Meant that they didn't need to elaborate further.
If they didn't need to elaborate further, then there would be a N there for
I
no,
see.
because you don't
guess
need
it-
to
I guess
elaborate
they-
further,
Guess they just didn't feel they had to put the end there.
but you're guessing.
Right.
Thank you. Now, I notice in your data set that you only use certain bands,
Yes,
and I represent the White Sand First Nation. And they weren't included in your study at all, were they?
Sorry, well,
The White Sand First Nation. My clients,
yes.
they weren't included in your study.
Um. These are the band, I have a list of the bands that were included.
Well, would it surprise you, would you disagree, do you have any reason to doubt that White Sand First Nation was not among the 16 bands you looked at?
That's possible.
You don't recall for yourself sitting on the stand here today?
No,
And the same would be for a First Nation called Michipicoten? You don't recall whether they're included in or not?
I wouldn't know offhand, no.
Or a band called AZA?
He
wouldn't
said
know? No, not ringing a bell? I want to understand, if you go to paragraph 85A, it says, we examined 16 of the 34 RHT and RST bands. And of the 16, did you look at the spending for each year of the 16 bands?
each even year from 1850 to 1956.
And you didn't find any data from 1850 to, I'm sorry, did you say?
Sorry, I gave you the wrong date. I apologize. 1880
Thank
to
you.
to 1956. Sorry.
Yes. And are you saying you could find no data from 1850 to 1880?
We didn't have the summaries of the trust accounts then.
Well, you may not have had summaries, but could you not get the trust accounts?
We did not have workable data, no.
When you say you didn't have workable data,
I can't even recall if the trust accounts existed at that time. I just know that we had summaries from the 1880 to 1956 period.
so if there were no summaries of the spending, you felt you didn't have reliable data.
That's right.
And do you know who prepared the summaries? Who prepared the summaries?
We received the summaries, I think they're from the government.
How do you know that the summaries are at all reliable if you didn't look at the source data?
I can't tell you offhand what the source was, but I know it was a reliable source.
How?
Just
Why do you
because
say it was reliable?
It was a published reliable government source. I remember that.
Okay, can you tell me what the reliable source was?
No.
My friend wants to say the reliable source was which? Go ahead.
I just want to say, if you look at the previous paragraph 84 discusses.
Thank you, counsel. So paragraph 84. So it was Indian Affairs annual reports that are available online.
That's right.
And so what happened then from the data you looked at from 1880 to 1926 and from 1927 to 1957, someone took the original source data and put it down in a summary form.
Right.
And that's what you're looking at.
That's right.
So it's only as good as the data that was entered by whoever made the decisions to enter it into the annual reports or the year-end statements, correct?
Right.
Now, I wonder if we could go back to Schedule 1. And I want to go to 1936. Now, you said in your report that two of the bands that you looked at were Pays Plat and Bictagong from RST.
Okay.
Now, I just randomly just chose 1936 for no reason. I just pulled it out and I can't find any reference to Pays Plat or Bictagong for 1936. I can only count 14 of 16 bands, not 16 of 16 bands.
Geez, I don't recall offhand on that. No,
What don't you recall?
I don't recall why there's only 14 for that year.
All right. Is it perhaps that Ernst and Young didn't fill in the data? Or do you not
They
know?
which,
Ernst and Young may not have filled in the data for those First Nations.
for some reason, maybe they didn't have it.
So your statement that you use the data for the 16 bands is really, you use the data for the 16 bands where you had it each year.
Where it was available.
Okay. And of the 16 bands, 10 of them were from the Robinson Huron Treaty Territory.
That's right.
And why do you believe that the Robinson Huron Treaty Territory bands are representative of the plaintiff bands in the Robinson Superior Treaty Area? Two different treaty areas, but why do you think they're representative? Why?
Well, remember, we started out using both. Both were included in this action. I don't know enough about RHT versus RST to say. But we assume that the sample and the results of the sample were representative of how bands spent their money back in that period.
But you do appreciate that the trial that you're testifying about right now is only about RST beneficiaries,
I understand that.
and your data combines the two treaty areas.
We did not take the RHT data out of this, no.
Why not?
It's not feasible to do that, given the time frame.
How much time would you need to do that?
A lot.
A
I
week?
can't remember when this case changed, when RHT was taken out of the action, but there was I had no consideration to redoing all of this, no,
I asked you how long it would take, a week, a month?
probably a couple of months.
Okay. So if someone had told you at the end of January, you could have done it by the end of March.
I would have called Ernst and Young to see if they had availability at the time, and if they said they could, I would have discussed how long it would take, and I would guess would take a couple of months.
Now, let's just stick with 1936, because there's an interesting entry for Red Rock. Can you, maybe we can go to 1936 for Red Rock, and there's funeral expenses there.
Right.
And so what happened in 1936, Ernst and Young recorded that $38.35 was spent in funeral expenses.
Right.
And your model, sir, I think I'm correct in this, assumes that that spending pattern would be repeated, and that's telling. If they had more money, they would spend it in the same way.
That's right. Well, we were saying there was consumption. We did not.
Yes, but
Yes. Yeah.
so you're saying that if the Robinson Superior bands, let's just use Red Rock. If Red Rock First Nation got 100 times more money in 1936 than they usually have, they would have spent 100 times more on funeral expenses. That's what that's what your theory says.
That's what proportionality says. Yes.
Do you see that sometimes proportionality doesn't work? I mean, it's not like 100 people died.
No, the proportionality has some issues, but it's sometimes, well, it's usually the best way to represent how spending took place.
I'm going to suggest to you it's not just some issue, it's a huge issue. Would you agree with that?
Not necessarily, no.
Let's go to 1956, again, a year I just chose but at random. And let's look at Fort William first. No, let's start with Batchewana. Now, Batchewana band is a Huron band, but again, we can just use this as an example. And this is the same proportionality question I have. They spend $500 in 1956 on erosion control. Batchewana, go up. Oh,
Sorry, I don't see it.
now would be a good time for a break, I think, since I've lost my data set. No, it's 11:30 and now would be a good time for a break. I apologize.
Okay,
I did not realize the time.
all right, let's take the break then, 15.
This court will recess for 15 minutes. Thank you.
All right.
This court is now resumed. You may be seated. Thank you.
Mr. Schachter, this is just a reminder that perhaps we can deal with it at the end of your cross-examination, but I would like to talk about some way of putting the columns which you have identified in the spreadsheets in some kind of document like one would do for the compendium, when one takes a full document and takes out an excerpt. I have, with help, worked with spreadsheets and one can isolate columns.
Okay.
So we can talk about it later, but I'm just putting that out now as something that, and
Yeah.
council can consider it.
Yeah, Ms. Lewis feels that somehow it can be done and I'll just accept that because I wouldn't know how to do it.
All right, and we'll, perhaps other council will jump in on that.
Yeah.
Okay, thank you.
We were talking about spreadsheet 1, exhibit 1-2105. And we're going to bring that back up on the computer. And I had was going to ask you to look at some spending by Batchewana band, but I was in error. I should have referenced you to Garden River First Nation. Now, Garden River First Nation is a Huron band, but for this, I mean, I just chose 1956 at random, and I think it perhaps will help demonstrate the point. And in 1956, we have Garden River spending $500 on erosion control.
Yes.
That's at line 8150. And it's classified as consumption. You see that?
I do.
And there's no description and no justification and no indication as to whether it requires any confirmation or discussion in columns H, I, and J. You see
Right.
that? And again, you would agree with me that if this First Nation had 10 times or 100 times the money in their account, they wouldn't be spending 10 or 100 times on erosion control.
Probably not, probably on something else,
Well, they may be investing it.
possibly.
Another one I want to look at is the one right below it is dentures. It's qualified as medical, and in your analysis, it says that if they had 100 times more money, they would have spent 100 times more on dentures. That's not a fair assumption, is it?
No, but we could assume that it might have been spent on human capital.
Why would you assume that?
What's that?
Why would you assume that?
It's classified in the human capital area. So that's as realistic assumption as could be made. But we don't know.
That, we don't know
We
is the
don't know.
point. Let's go down to Fort William in 1956. And now Fort William, the very first expense that they have is an enfranchisement expense of $27.91.
Right.
Do you know why that payment was made?
Why there was enfranchisement?
Why there was an enfranchisement payment?
I'm assuming that some member left the band
Yes,
and was paid some share of some fee for leaving, maybe some share of the revenue account or something.
now, if I told you that there is evidence in this case that enfranchisement was taken by band members. Sorry, let me rephrase that.
Sorry.
One of the issues that led to people taking enfranchisement was their economic situation, correct? Do you know that?
Oh, I would assume so, that, I mean, enfranchisement to me is band members leaving and I've always wondered why it was called enfranchisement and not disenfranchisement, but that's the word that's used. They leave the band and they're off the reservation, yes.
But one of the reasons they would do so is for economic reasons, because they're poor.
That would be a logical reason for leaving the band.
And
There
if
could
the
be
band,
other- There could be other reasons.
yes,
but,
indeed.
There could be other reasons, marital, whatever, but certainly in a sense, they could do better elsewhere. Would be a reason for leaving the band.
If the band had 100 times the amount of money in its accounts to spend on its First Nations members or to invest for its First Nations members, do you think it's reasonable that maybe some people wouldn't have sought enfranchisement?
Yes, I think it's reasonable that, again, as I said, there could be other reasons for enfranchisement besides financial. But with a much larger payment, there may have been less members leaving the band.
Let's look at Gull Bay in 1956. Now, Gull Bay, Ernst & Young record relief of $1,010.93 as consumption.
Right.
Can you tell me what that relief was used for?
I can't tell you precisely, but it was obviously used for members of the band that needed support.
But you don't know what they needed support, whether it was to send them to school, you have no idea.
If it was sent them to school, would probably have a different item, but I wouldn't know precisely, no,
You don't know what it's for,
no. I just know
but
it's
yet
a-
you
it's a-
classify it as consumption.
Yes, it was a payment to them because they obviously had need.
Let's go to the right for this a bit. Again, for this $1,010.93 in 1956 from Gull Bay, in columns H, I, and J, there are no entries. It's blank. You
Right.
see that there?
That's right.
So the only description where we see a blank in column H is what? You see, the classification is Ernst and Young's classification. That's not what the entry says.
No, the relief would be, might be the relief fits into consumption, yes.
Right, well, sorry, let's go to
Yeah.
the left, to column, the description. Was the description column what was in the summaries?
You would see the word relief.
All right. So that then is where all the data you have in terms of how to describe what relief is. You don't know what it was used for.
No, we would not know.
And you've told us you only used even years.
Right,
Now, for post 1957, you used, was it a mathematical average over the period 1880 to, oh, sorry, for the period post 1957, you used 1956, correct?
right, right.
And the reason you said that is because 1956 is an average of 1880 to 1957.
No, I don't think I said that. I said 1956 was reasonably representative of what had happened over the period. So we decided we didn't have, it was an unbiased estimator of where spending would take place after that. So we used the 1956, 57 numbers going forward.
I'm going to suggest to you that the average, what you used is an average between 1850 and 1956 or 1957. And that you said that the 1956 number is close to the average
Right,
over the whole period. That's what happened.
yes,
All right. And I'm also going to suggest to you that the average over that period tells you nothing about trends.
true.
An average can be misleading because an average simply by definition averages things out and it doesn't tell you where the spending pattern is going.
Right.
I'm going to suggest to you it was an error to use 1956 on a go-forward basis from 1958 through 2019.
Well, that's your view. We thought it was representative period.
I wonder if you could go to tab 6 of the compendium, please.
I don't think I have it, tabs. Oh, it must have fallen apart. Sorry. I'm sorry. Yeah, I found it. Yes.
All right. So tab 6 was my attempt at trying to figure out your report and all the numbering prior to your council helping out with that on exhibit 42. So they're the same. in many respects, and the version at tab 6 has some additional data on it that I tried to insert as your testimony was going forward.
Okay,
So I just have
Could you
a name.
remind me how we identified this, the original document?
It was identified as the Booth Kirzner Report, Figure 1, augmentation. I think that's what I
Okay.
recall. There was a debate about whether it
Given
have-
a exhibit number?
it was Exhibit 42.
Thank you.
Now, what you'll see that's a little bit different is that at the bottom, I have included in a table from Stiglitz and Hutchings reply report, Exhibit 4, paragraph 129.
okay.
You said it's not new. You said it's recent. No, we can't talk about it after. We have to talk about it. Okay. All right. So Ms. Lewis has just informed me that I made an error and I apologize. At the bottom of page 43 of the compendium, which is my version of Exhibit 42 with some additional data on it. At the bottom, there is a table
I'm sorry, I've now lost you. We're on,
in the compendium tab 6.
are we on page 43?
Yes. At the bottom, there's a table.
Okay, so it's got 38 at the top, 43 at the bottom. I just want to make sure we're on the right.
Yes, yes,
Yeah, okay. And
Right.
there's a table,
at the bottom.
and whose table is that? I'm just,
Well, I just wanted to let you know that the first column is from the Booth and Kirzner report, page 95. Is that correct?
okay, well, I certainly recognize the 8.2 and the.
Or I'm sorry,
5.5.
no, sorry. The first column is from the Stiglitz and Hutchings reply report, Exhibit 4, paragraph 129. Is that right, Ms. Lewis? No, I'm not, I'm on the first column, column A. That is from the Stiglitz and Hutchings report. Right. What page, can you please give me some help, Ms. Lewis? Column A comes from Stiglitz and Hutchings reply report. What page number of their reply report? Page 60. All right. Now, column B, Ms. Lewis is going to help me here as well, comes from the Stiglitz and Hutchings reply report, page 60. Okay.
Right.
All right.
Okay.
The third column about effective rate of return is new. So let's put that aside for a moment, okay?
Yes,
At the bottom of compendium page 6, there's some writing, BK report, page 95. Do you see that?
that's your writing, right?
Yeah,
Yeah,
it's
okay.
our writing. And on your report at page 95, you actually average out education and healthcare to be 7.5%. And all I'm suggesting to you is that Stiglitz and Hutchings dealt with it as 10% and 5%, and you aggregated the two for an average of 7.5% as human capital.
Well, there were other I don't think that's exactly right. I mean, the 7.5 I think was the number we used for human capital, 7.5. It wasn't an average of education and healthcare. There were other factors in there, but the 7.5% number looks right.
All right, perhaps you can look at the screen. We're looking at compendium page 47. At compendium page 47 is page 95 that I was referring to, and your 7.5% comes from the human or social capital investment, which is a composite of the returns to education and the SDR used in health. Is that true?
The 7.5 is correct. Professor Booth can speak to this of whether it's a precise average of education and healthcare, as you seem to have assumed here, or whether that 7.5 is arrived at slightly differently. I'm
All right.
not going to elaborate on that.
Now, in exhibit 42 and also at the first page of tab 6, you identify consumption as, and I'm using your words, earning rate of inflation.
Is which is earning the rate of-
Earning, it says
Yeah.
earning
Yes.
rate of inflation. Now, if I buy an apple for $1, not only am I lucky, but if I buy an apple today for $1, if I, and inflation is at 3%, and that means that next year I'll need $1.03 to buy the same apple, right?
Right.
And so to suggest that merely retaining the purchasing power is an earning is a little bit pejorative, wouldn't you agree?
That's your term. As I've said earlier, Professor Booth is going to testify to the consumption rate of return calculation and assumption, I should say.
But merely being able to eat the same apple a year later, you're not earning anything.
The fact that you didn't get the apple. Right, that this is different. The fact that you didn't get the apple should be entitled to something for not getting the apple.
Yes.
And our view is, and again, Professor Booth will elaborate on this, our view is that the best estimate is a basket of goods is measured by inflation.
Right, but you're not getting anything for not having the apple for a year. All you're getting is the apple after a
Well,
year.
If you follow your reasoning, consumption would generate no return.
And that's exactly what I think it does.
You think consumption earns no return?
I'm thinking consumption at the inflation rate is earning no return at all. That's correct.
What is it? How could it not be earning no return?
Well, I think,
This is not.
let me try the question this way.
Just one at a time, you can keep
Yes, I
going.
apologize. I'm
Just
gonna
let
slow
me
down.
let me
I'm
try
gonna
it
slow
this way. You have said that if I have an apple, but if I'm deprived of the opportunity to eat an apple in year 1, and I'm only given the apple in year 2, I've suffered a loss. The loss is not being able to eat the apple for a year.
No, you preserved your purchasing power.
Right,
That's-
so where in your consumption-based model, where do I get compensated for not being able to eat an apple for a year? I'm pretty hungry.
You
Is it a
get-
loss?
We allow you to preserve your purchasing power over time. You earn the rate of inflation. Some years was quite high. Some years it was negative. We never make it negative. We always cap it on the downside at 1%.
Now, on exhibit 42, you have rates of return in blue for business, infrastructure, and human capital. But what you don't have on exhibit 42 is depreciation.
Sorry, I'm on the wrong page.
And we're looking at exhibit 42, if,
Exhibit 42 is page 43.
yeah, well,
Are we still on the
Exhibit
same?
40
so maybe if the witness could be provided a copy of exhibit 42.
Exhibit 42 is the original of this chart. Without the hand annotation.
Am I still looking at the same table that has 38 at the top and 43 at the
No.
bottom?
No,
No, exhibit 42, your lawyer did up for you. You don't have it and we don't have a copy?
Sir?
Is it in the compendium?
No, it's not in the
I might be
compendium.
able to help you.
Okay, oh, thank you.
Exhibit 42 is the original of this chart without hand annotations. It's a single page document.
So where is it? In my,
It
It should be in
might
front
well
of you, I
be
would have
on your
thought.
table.
this must be it.
There we go. We got it. Thank you.
My apologies.
No need to apologize. There's so much paper here. I mean, we're all being buried under it. If you look at exhibit 42 under the, there's some blue rates of return, infrastructure 5.5, business 8.2, human capital 7.5.
Right, in green, yes.
Yes, but those amounts, you took off depreciation on those amounts, correct?
No, first first they were grossed up by the rate of 1 plus the rate of inflation, then depreciation came off. You can't take depreciation off those numbers.
All right, so now I want you to look at page 43 because I've done that calculation for you. Yeah, I think the formula you just identified is the very formula that I think is the appropriate one.
Now I've lost.
Compendium, page 6, it's the, oh, your compendium fell apart?
Unfortunately, your compendium fell apart. No, I found it though.
Okay, so if you look on the right-hand side of the column,
Yes,
there's a B and K effective rate of return after depreciation adjustment.
yes.
And the formula you were identifying, I'm going to suggest to you is the correct formula to adjust for depreciation if one was going to do it.
Okay, are you asking me to comment on the 2.8% number?
No, I'm asking you to I'm asking you to comment on the formula C equals 1 plus A in brackets multiplied by 1 minus B.
Okay, I don't think it's a complete formula.
You think it's incorrect?
I think the formula is not complete. I didn't say it was incorrect. I said it, I believe it's not complete. The complete formula is using your terms is 1 plus A times 1 plus inflation times 1 minus B.
Your rate of return on business is not actually 8.2%. Would you agree with that? The real rate of return,
It's not?
I'm asking.
It is. Eight,
Oh,
Sorry.
okay.
you're asking me if 8.2 is the real rate of return?
Yes,
Then, and to put it into this final column, you would multiply by 1 plus the rate of inflation. Then you would multiply by 1 minus depreciation rate. This final
Yeah.
column has no meaning for me.
all right.
I-
Maybe I can try it a different way. I don't want to argue with you and I may be able to get to the point I'm trying to get at this way. Let's just use healthcare as an example. You have a depreciation rate of healthcare of 4%. Do you agree with that?
I don't think so. We have a depreciation rate of 4% per human capital.
Okay. Thank you.
So why don't we, oh, I don't want to tell you what to do, sorry.
Okay. better example, so it's not mixed, is infrastructure. You have a depreciation rate of 3.3% for infrastructure,
Yes,
and you have a real rate of return before depreciation of 5.5%.
yes,
And so would you agree with me that at the end of the day, the rate of return is on infrastructure is less than 3.3%?
I would not,
You wouldn't.
I would not agree with you.
You wouldn't
The
agree
rate of
with me that the,
return on infrastructure would be 1.055, right? The 5 point. I'm gonna slow down, sorry.
yeah,
1 point, I'm gonna slow right down. The rate of return on infrastructure would be 1.055
yes,
times 1 plus whatever the inflation rate was that year. Let's say it was 3.5,
yes,
which would be 1.055 times 1.035, then times 0.967.
and why 0.967?
That's the 3.3 depreciation rate translated into 1 minus depreciation.
Right. And what is the math? And in each one, you'd have to assume the inflation rate, eh?
That's integral to our model. Our model, you know, and I spent quite a bit of time on this yesterday. For each category, it's 1 plus the real rate times 1 plus the inflation rate times 1 minus the depreciation rate.
The point is, sir, that am I correct in understanding you can't simply just use the 3.57
No, you have
percent
to-
average rate?
No, and we never did. You have to use
Okay.
the inflation rate for the year.
Okay, thank you. You only use spending patterns from the revenue account, correct?
That's correct.
And in other cases you've done, you used both the revenue and the capital account.
Correct.
And you would,
In other cases,
yes. And which other, in other cases such as in
Laxual,
Lac Sewell, which is Southwind?
yes.
And would you agree with me that most spending is actually from the capital account?
Laxual, I can't compare this to Laxual. We use a completely different. We use the same factors, we use the same approach to rates of returns, but we used a different model. We used the Clonforn model, and I don't think it would be helpful for me to go into the details right now. But spending patterns, we believe, would be revealed in the revenue accounts. The capital account, money stays in the capital account, it earns interest, the interest is then transferred to the revenue account. So the major spending activity takes place in the revenue account, not the capital account.
I'm going to suggest to you that that's just not true, that there can be payments directly out of capital.
Well,
You didn't look at the capital accounts at all, did you?
we didn't need to look at the capital accounts in this case.
You assumed that in this case, in every instance, there was no spending out of the capital account.
We assumed that the interest earned in the capital account would go to the revenue account, and we assumed that the pattern of spending in the revenue account would be representative of how the bands would have spent.
Just to be clear, though.
Yeah.
You didn't actually look at the capital accounts.
We did not look at the capital account.
you would agree with me, sir, that between 1880 and 1957, there was considerable variation in average spending
I would
in the
agree with
revenue
you.
account?
Sorry, I didn't hear the answer.
I would agree.
Thank you.
Would you agree that the percentage retained in the revenue account was relatively low at the start of the period you examined, but rose steadily over the years?
I've described this somewhere. I just need to find it.
Try paragraph 102 of your report.
Thank you. I'm in the wrong place.
It's the fatter of the two reports.
Oh, I'm sorry. I think you said page, it's,
It's paragraph 102.
sorry, it's paragraph 102. Okay. Yes.
And I asked you whether you agreed with paragraph 102 that the percentage retained in the account was relatively low at the start of the period, being 1880, but rose steadily over the years.
Yes, that's what we saw.
Did you look in to see whether First Nations were managing any money outside the Van Trust accounts?
We did not.
Can you go to, please, paragraph, 4 of your reply report? So paragraph 4,
I'm sorry, I'm not there yet.
yeah,
Yes. Okay.
at paragraph 4, you, and I'm using your adjective, you accuse Professor Stiglitz and Mr. Hutchings on 2 occasions of either fantasizing about what might have happened or creating a fantasy world. That's your words.
Those are the words that were used, yes.
Do you suppose that's maybe a little harsh?
Maybe an adjective that would be a little strong.
The approach you used requires you to answer the question, what would have happened if the Crown had not breached its duty and paid the augmented annuity when it should have been paid, right?
Right.
You construct a counterfactual world that didn't actually take place.
I don't think anybody had a world that didn't actually take place. You're right.
Your counterfactual world looks at historic spending patterns of a cohort who were poor at the time.
Sorry, could you repeat that?
Your counterfactual world looks at historic spending patterns of a cohort, group of people,
Yes.
a band, who were poor at the time.
I can't answer that last part.
You think it's them being poor is too pejorative or too,
I just don't know.
if you don't know if they were poor?
I think Honor asked me a question yesterday about that. I don't think I want to give an opinion as to whether the band was very poor or well off. They certainly didn't appear to be well off, but I don't want to express an opinion on whether a band was poor. I can talk in relative terms.
Okay. In your analysis, you didn't consider how the receipt of significant annuity augmentations over the years might have changed the spending patterns of the bands or the band members themselves.
We did not know. And I
Will you
said
accept
so-
that that is,
And I said so to that effect on my very last slide
all right,
yesterday.
thank you. At page. Sorry, gotta go to the compendium. I think it's the last tab of the compendium, tab 8. Tab 8 comes from table 5. And it's,
Sorry, I have to read, the compendium fell apart. I just need to get it. Sorry.
okay,
Here's tab 8, I think.
it's a chart called figure
the chart?
3. Reconciling our results with Professor Booth and Kirzner's
yes.
results.
Yes,
And I understand that you don't agree with the adjustments they're making. But if they are correct about the depreciation, if they are correct about consumption, and if they are correct about the different rate of return on human capital, would you agree that your number would be the yellow bar and not the blue bar on the very left-hand side?
so I'm gonna answer that. So here's what I believe they've done.
Yeah,
They've taken our model and they've gone iterative, they've taken an iterative approach. And they first assumed that that there wasn't, I forget what order they went in, but they changed consumption to a different level.
yes,
They assumed that depreciation did not exist. And then they assumed that the rate of return on human capital was higher than the one we used.
yes,
And going step by step through that, they end up with a much larger, obviously, set of numbers. Now,
yes.
So here's my response to that. They're careful mathematicians. I would doubt that they made a mistake.
On the math,
On the math. I would doubt that they made a mistake on the math.
you haven't
I was-
checked.
I was surprised at I didn't recreate it myself. If I have to, I will, but
Oh, no, that was my question. I just wanted to know if you did the math to check
What's
if
that?
it was I just wanted to know if you did the math to check if it was accurate or not.
the only thing that surprised me was that the human capital had such an effect. I wouldn't have thought that it would have had that effect, but I'm assuming that that they would not have made a mistake on the math in that
Okay.
iterative approach.
I want to thank you for your time, sir. I apologize that the compendium fell apart. and that it caused a little consternation. I don't have any more questions for you, but I believe there's a couple other people that might.
Okay, thank you.
So we'll just, and I don't believe it's going to be very long, so.
The
I will let-
following, the compendium falling apart was not a problem.
Oh, okay.
I lived through it.
Mr. Gober will let you know and if he needs a break.
Always happy to get underway and Professor Kirzner, we've been introduced. My name is Brian Gover. I
Yes,
act for 7 First Nations who are added party plaintiffs in this proceeding.
I see. So you're plaintiffs in this action? is that
Yes.
it? Yes, okay.
And what I'd like to return to, Professor Kirzner, is Exhibit 38. That's your primary report. Paragraph 85A, and I know you've dealt with this to some extent with my friend, Mr. Schachter. My question is this: in building your model, you've told us that you and Professor Booth looked at the band trust accounts of 16 bands. Is that right?
I'm sorry, where am I supposed to be looking at?
Well, the reference is to Exhibit 38. That's your primary report, paragraph 85A.
Okay, yes,
And you have that now. My question was, in building your model, you and Professor Booth looked at the band trust accounts of 16 bands. Is that
Right.
correct?
that's correct.
And that was comprised of both Superior and Robinson Huron Treaty bands.
Yes,
Out of the total of 34 bands, that is, between the two territories. Is that right?
that is correct.
You understood that there were 12 bands in the Superior Territory. Is that correct?
I forget what the breakdown was, but
Fair enough. You'll take my word for it. There are
I'll
12
take
in
your
the
word for it
Superior Territory?
That the 16 was broken down the way you said.
Yes. And you understood that the majority of the bands, 22, were in the Robinson Huron Territory.
Yes,
So you looked at accounts of less than 50% of the bands. Is that right?
only in terms of the number of bands, but not in terms of the activity of the bands. We looked at the bands that had the most robust data.
Right.
Most activity, yes,
You looked for records, right?
yes, so. So the answer is yes to your, in terms of the number of bands, but not in terms of the activity of the bands.
Right. You looked at about 47% of the bands. Fair?
Of the bands, yes.
Yes.
Okay.
And considering just the Superior bands, you looked at the accounts of 6 of them. Is
Okay.
that right?
I'm gonna have to take your word for that unless we at this stage. Okay.
Fair
Mis-
enough. And
Mr.
yeah.
Mr. Gover, when you say you looked at 47% of the bands
that-
total,
That's total. That's 16 of 34.
thank you. Thank you.
And the accounts of the Superior bands that you looked at were those of Red Rock, Big Dugong Nishnabeg, Fort William, Gull Bay, Long Lake 58, and Pace Plat.
I'm gonna take your word for that as well.
All right. So less than half of the accounts that you built your model from were Superior bands. Is that fair?
Well, yes, in terms of, as I said, in terms of absolute numbers, yes.
And as you've told us, the majority were Robinson Huron Territory bands.
Yes,
And you're obviously aware, as you told Mr. Schachter, that the Robinson Huron case is not proceeding anymore. You understand that.
I understand that.
And this trial concerns only the Robinson Superior Treaty and the Superior First Nations.
Yes, I understand that.
And you've told my friend you never revised your model to account only for data from the Superior bands.
That is true.
Now, even though you only looked at 16 of 34 bands, you assumed that the spending patterns of the 16 were representative of the other 18 bands. Is that
That's
right?
correct. That's correct.
You did not look at any evidence confirming that that was in fact the case, though, did you?
I'm not sure I understand the question.
Well, you didn't look at those other bands to confirm that the 16 you looked at were actually representative. You assumed that.
I'm not sure now. I think we may have. I cannot recall precisely.
You can't say today one way or the other,
I
can you?
cannot say one way or the other, but I cannot say we didn't.
And when you looked at 6 of the 12 superior bands, you assumed that the superior bands had spent and would continue to spend their money in the same way as the Robinson-Huron Treaty bands. Is that fair?
Well, in the same manner as the 16 band spent, yes.
You accept that of the 34 bands, or even just the 12 superior bands, they may have different populations. You understand that?
Yes,
They may have different geographic sizes.
possible, yes.
They, in some instances, received their reserves at various times instead of all at once in 1850. You understand that?
When you say the reserves, I'm not sure which.
Well, I mean, the reserves under the Indian Act, the territories reserved to them under the Indian Act. You understand that some of the superior First Nations only received their reserve lands after 1850.
Well, that's possible. I'm not sure how it would affect what I did, but yes. Okay.
Right. So, for example, at least one of the superior bands only received its reserve in the 21st century. You didn't know that.
No, I did not know.
You accept that the superior bands have different amenities and level of services on their reserves.
It's possible.
They have different needs and priorities.
It's possible.
They have different access to other sources of revenue.
Well, that's possible.
So we've heard a term used by the chiefs here in their testimony of own source revenue. That's possible too, that they have own source revenue. Is that right?
That's certainly possible, yes.
And of course, they have different leadership, each of the bands. You understand that as well.
Yes.
So do you accept then, Professor Kirzner, that as a result of those factors, spending decisions will differ from band to band?
Well, we know that, but trying to get a good fix on how spending might have taken place, given the data we have. But yes, there'd be variations among the bands.
Sure.
Yes.
And I'd like to return to a topic. I know you've dealt with it already somewhat with Mr. Schachter, but you built your model using spending pattern data up to 1956.
Right.
You then assumed that the spending patterns after 1956 were, in the words of your report, identical to those of 1956.
Yes, we considered it the best estimator of how spending would take place.
And you used the word identical in paragraph
Yes.
109 of your report.
And that's what we did, yes.
So every subsequent year, you assume to be exactly the same as 1956.
Yes,
So you had 63 years, 1957 through 2019, without looking at actual spending patterns of the bands.
no,
Is that fair?
because we didn't have reliable data for that.
You considered that 1956, you told Mr. Schachter, was representative of the spending post 1957.
Yes,
You didn't point to any evidence confirming that was in fact the case, though, did you?
No,
You didn't point to any evidence that the band's spending in 1956 was at least broadly consistent with their spending patterns over the next 60 years. Did you?
we wouldn't know.
Now, to build your model, you looked at the spending patterns in the band trust accounts of some of the bands, correct?
Yes,
To be more precise, you looked at the spending patterns in the band trust accounts of some of the bands in even numbered years, correct?
yes.
Now, and I might ask for my friend Ms. Lewis's help here to turn up slide 76 of Exhibit 40. That's your demonstratives. So this was slide 76 of Exhibit 40. And here you refer to, this is your final results page, I think. The penultimate page or yes, the penultimate page of your slide deck. You refer to actual spending patterns of the bands. Is that
If I
correct?
could just get to it. please.
Yes, pardon me, Your Honor.
Go ahead.
Thank you. So on this slide, we have it now on the screen. You refer to actual spending patterns of the bands. Is
Yes.
that correct?
Yes,
You refer to realistic investment spending activity.
yes,
Now, to be clear, you only looked at the data from the trust accounts held by Canada, correct?
held by,
Canada. The band trust accounts.
yes, okay, yes,
And you're aware that especially in more recent years, band may have other bank accounts.
yes,
The band may have an account at a regular bank for their general operating expenses. Is that correct?
yes. By 1956, 57, there was less activity in the trust accounts. We know that.
Right. So the answer then is that the band may have an account at a regular bank for general operating expenses for regular expenditures. Fair?
That is quite possible. Yeah,
Bands may also have trust accounts that are held or managed by financial institutions.
That's possible.
And those accounts would not be held or controlled by the federal government, would they?
Not if they were with financial institutions, no.
Now, as you've told my friend, Mr. Schachter, to build your model, you didn't look at the spending patterns in the band's general bank accounts, did you?
When you say general,
Yes, general bank accounts, accounts that,
oh, no, we did not, no. We didn't have that.
Sorry, you both understand what general bank accounts mean?
yeah, so what I mean is a bank account at, let's say, one of the chartered banks in or near one of the
Union
communities.
of Band holding funds at TD Bank.
Right.
No, we did not have that information.
Well, we're talking about the same thing then, and thank you for that, Professor Kirzner. You didn't look at the spending patterns from the private trust accounts of the bands, did you?
We did not.
You only looked at one type of account for the bands, and that was the band trust account managed by Canada.
Yes,
So in terms of the data of the spending patterns of the bands, you were dealing with a limited data set. You'll agree?
well, it's certainly you could develop a more robust data set if you had it, absolutely.
It was limited. We can agree.
Well, most data sets are limited, yes.
You didn't have a complete picture of all of a band's spending or saving decisions.
No, as I indicated.
If you had looked at all of the data from all of the accounts managed by the bands themselves, your model may have been different.
It's possible. It's possible. And the model wouldn't be different. The spending patterns might have been different.
The percentages
Yeah.
spent in different categories may have been
May
different.
have been different, yes.
Now, we just spoke about whether the bands may have additional general or trust accounts other than the band trust accounts managed by the federal government. Did you watch the testimony of Chief Patricia Tangi of Michipicoten First Nation in this trial 2 weeks ago?
I did not.
Do you understand that Michipicoten First Nation is a signatory to the Robinson Superior Treaty?
I will take your word for that.
Thank you. Did anyone provide you with a transcript or a summary of Chief Tangi's testimony?
I don't believe so, but it's possible. I'm gonna answer that by saying I don't know.
All right, this may refresh your memory, Professor Kirzner. Are you aware that Chief Tangi testified about Michipicoten First Nations financial management?
No.
And I take it you have no reason to doubt the testimony she gave in this court to her honor 2 weeks ago.
I don't know how to answer that. I don't know who she is.
Right, well, I'll tell you about it. Chief Tangi spoke about trust funds maintained for her community. And she noted that it was originally managed by Toronto Dominion Bank and then later managed by AGF. That sounds like an investment decision made by an investor, doesn't it?
What year was that? What year did that start?
This is in more recent years.
I would have thought.
That would be an example, Professor Kirzner, of a trust fund maintained by a band that is not the band trust account maintained by or managed by the federal government.
Yes, it would if they were using an outside financial advisor.
And again, you didn't examine the records for these types of trust accounts. You didn't examine the spending patterns for these types of trust accounts.
No.
Chief Tangi spoke about something called the Wealth Generation Fund. Are you aware of that?
No.
She noted that under this policy, 60% of funds are invested for the next 15 years. You're unaware of that?
As of when? I'm sorry.
Well, that's one of these more recent investments made by a First Nation that you're unaware of.
I'm not aware of it. I take it was made within the last 15 or 20 years or 10 years.
Yes.
Yeah, okay.
And of the remaining 40% of the funds, half goes to the band's own consolidated revenue fund for things like infrastructure. That's data you didn't have available to you.
Right.
And the other half of the remaining 40% goes to programming and services for citizens. You didn't have that data available to you.
No.
And you accept that these distributions are different from the spending patterns in your model.
Sorry, could you repeat that?
Yeah, you accept that the spending patterns I've just outlined from Chief Tangi's evidence to this court are different than the spending patterns in your model.
Well, they certainly might be.
Yeah, you just don't know. You
I
can't tell.
don't know if they were or not.
You didn't look at Michipicoten First Nations Wealth Generation Fund in developing your model. Fair? You didn't take that evidence into account in developing the model.
I did not.
Now, Chief Tangi also testified about a trust fund set up after settlement of a claim that the Michipicoten First Nation had against the Algoma Central Railway. You weren't told about that either.
No, when was that?
Again, that was in the more recent category that we've described. You understand that now?
Right.
Right. And she told us that of the $11.7 million settlement, $8 million was invested in the trust fund. Again, that's new data for you.
Right.
She said that the fund permits disbursements to individuals for health, home improvements, and education. Again, new data for you, Professor Kirzner.
Yes,
And again, you didn't look at that trust fund in developing your model.
and
Fair.
that's a recent one as well, I assume, right?
Right. Finally, Chief Tangi testified about the reserve boundary settlement. And you didn't know about that.
I do not.
You didn't know that it was a settlement for $45 million. Did you? No. And Chief Tangi testified that there was some disbursement of funds to individuals, but $32 million of that 45 million was
Okay.
put in trust. New data for you once again,
Yes, it
Professor.
is. Yes,
Chief Tangi mentioned that only 4% of it could be withdrawn from the capital. Again, you didn't look at that trust fund in developing your
no,
model.
that sounds like an endowment fund, but no.
So all of these accounts and spending patterns were in the recent years, in the 2000s. So after 1956. And therefore not incorporated in your model at all.
That's correct.
And that's because this was the period for which you just assumed spending patterns would be identical to 1956, correct, Professor?
That's correct.
No one informed you about Chief Tangi's evidence at this trial and about to use the words that you used in slide 76 of Exhibit 40, Michipekatan First Nations, and I quote, actual spending patterns, did they? No one told you about that.
Certainly, if they did, I did not use it.
Right.
Yeah.
And do you agree with me that knowing about what that Robinson Superior Treaty First Nation had done with money would have helped you to understand realistic investment and spending activity and to relate it to this court?
Well, it would have better informed it.
Yes.
In the later years.
Thank you very much, Professor. Those are my questions. Thank you, Your Honor.
Thank you. Just give me one moment to catch up, please. Thank you. May redirect?
I do have some questions in redirect.
Thank you.
The first place I want to go, I'm going to have to put something up on the screen. And so I'm waiting for my colleague to catch up with the technology in order to do that. So it'll just take us a moment. Professor Kirzner, you may remember you were asked about the instructions you received from the Department of Justice
Yes, I
in order
did.
to prepare your report. And my friend, Mr. Schachter, pointed out to you that your instruction letter was dated in July, just days before you signed your report. Do you
Right.
remember that? So did you and I have telephone calls and Teams meetings to discuss what the Department of Justice was asking you to do before you received your written letter?
Yes, we did. Our very first meeting, in fact, I think was pre-COVID.
That's fine.
Yeah.
I want to then look at an exhibit that you've looked at before. It's the expert report of Mr. Hutchings.
Mr. Schachter's on his feet.
I see what's on the screen, and that is not redirect. If you want to ask him questions about him referring to Mr. Hutchings' report, you can refer him to Mr. Hutchings' report. But if you want to make argument about questions that you about the letter on my letterhead to Mr. Hutchings, you may make argument about that, but I don't think it's fair to put it to this witness. I don't think it's redirect.
I'm not sure what it is. So is this a objection that should take place in the absence of witness?
I don't think it's necessary at all. This is this is part of Mr. Hutchings' report, which Mr. Kirzner reviewed. And the point that I'm intending to point to Mr. Kirzner is discussing how instructions are given in a case like this.
Well, you can do that without Mr. Hutchings' letter, but go ahead. Go ahead.
So here we see the letter that was provided by my friend, Mr. Schachter, to the plaintiff's expert, Mr. Hutchings. And you'll note it is dated January 30th, 2022, which is one day before the date of Mr. Hutchings' report. And in the introduction, it says, "We are writing to confirm that Red Rock and White Sand First Nations retained your services in August 2020 to assist in identifying and calculating the net Crown resource revenues, etc." The next paragraph, "During a number of follow-up telephone calls, we have provided oral instructions to you. This letter confirms the questions that we asked of you and which we understand are to be addressed as part of your report." Now, I want to take a look at the instruction letter that you were provided to compare, Professor Kirzner. And my friend reproduced that.
So I shouldn't be reading this one right now.
Well, I just read it out loud.
Yeah,
Yeah.
okay, but that's not, okay.
Yeah, no, I wanted to use this as because I'm going to ask you to compare the instructions that you received.
I think my friend is really directing the witness to an answer that she wants instead of using open-ended questions. But it's already, the cat is out of the bag, so to speak.
Well, since the cat is out of the bag, then I think I can finish my questions there. On that point, we'll move on to the next one.
But well, you should ask the question.
My question is, Professor Kirzner, is it typical in cases like this that counsel engages with an expert orally to discuss instructions before providing the final letter of instruction?
In complex cases of this sort, yes.
So it's not unusual then for you to receive a letter dated days before your report is actually due?
Not unusual.
Okay, and of course, we see the same thing happened here with Mr. Hutchings.
Right.
So you were asked by my friend about the selection of bands that you looked at. Out of the 34 bands, there were 16 for which you and Ernst & Young looked at
Right.
band trust account summaries. And these 16 bands, what year did the trust account summaries begin?
1850. 1880.
1880.
1880.
So if there was a band for which there was no trust account until potentially 1929 or 1930, would you have used those?
No, that would not have been in the sample.
And you
I
picked,
just want to make sure I know the question. You assumed it, but go ahead, Sarah.
so the the bands that you chose to look at were ones that had complete records going back to the 1880s. Is that right?
That's correct.
So if there was a band that didn't have a trust account until it was recognized by the government later, let's say 1930-ish, you would not have used those records. Is that right?
Right, it's called survivorship bias. You always, you work with a series and you'd start with the beginning of the series.
Thank you. Now, I wanted to look at the compendium that my friend used. Tab 3, we're talking about here the Canada Pension Plan. Do you remember being asked about the Canada Pension Plan?
Yes, I do, yes.
Is the size of the pension plan a factor in the risk that it can take?
Oh, certainly, very, very large pension plans can, there's all kinds of things that very, very large pension plans can do that smaller, medium and smaller pension plans cannot do.
Do you know how many individuals are served by the Canada Pension Plan?
How they're served,
How many individuals? I'm thinking numbers. How big is the Canada Pension Plan? Do you know?
well, it'd be a huge number. It would be in the well into the millions, of course.
And
Into the many millions.
now, the current, we've heard from other witnesses that the current population of the 12 Robinson Superior bands is about 15,000 people. Can you assume that?
That's of the
Of-
RST,
Of the 12 Robinson Superior bands, the RST. That's today.
right?
Now, over the 169-year time frame, the middle of that time frame is about 1935. And we've heard from other witnesses that the population of these 12 bands around 1935, the middle of that, the entire time frame, is somewhere between 1,765 to, Professor Bignami suggests, as high as 2,983. So I'm going to suggest, let's just take a figure of somewhere between 1,700 and 3,000 individuals.
Yes,
Would a group of that size be able to take the same kind of risks as the Canada Pension Plan, which manages funds for millions of people?
absolutely not. So I've worked for different levels of pension plans and endowment funds, and the very large ones can do many things, including actually buying businesses, alternate assets, etc., that medium funds cannot do, and the very small funds are very limited. And I discussed one of the very, very small funds was, even though it was 100 and some odd million, was Canada Council for the Arts. It had very limited opportunities compared to the larger endowment and pension plans.
Thank you. Now, I wanted to go to the last tab in my friend's compendium for you, which was this diagram, colored bar chart from the expert report of Professor Stiglitz and
Yes.
Mr. Hutchings. And here I want to, we were working in your cross-examination forward from the small blue box on the chart. And again, I'm at tab 8 of that compendium that's marked as Exhibit M. We started with the small blue box being your Model 4.
Sorry, what tab?
It's tab 8 of the compendium that Mr. Schachter prepared. And so I think you've got that colored bar chart. This is the one I want to
Yes.
ask you about.
This is the one, right?
That's it,
Yes.
yeah.
Thank you.
So just as a reminder, we were told, and I think it's evident from the legend of the chart, that what Professor Stiglitz and Mr. Hutchings have done here is they've taken your Model 4, which is the low blue box at the far left, and they say, if you used their number for consumption, which I believe is the band trust account rate, rather than your number, which is inflation, the bond rate. You know, that would make your model creep up to about 10 billion, according to this graph. Do you see that?
I do.
And then they say, well, if you remove the Booth and Kirzner depreciation adjustment, that also would bump the number up.
Yes,
And then they finally say, if you used the Stiglitz and Hutchings preferred rate of return for human capital as opposed to yours, it would go up yet again.
right.
And ultimately, they show that when you adjust for these factors, the Booth-Kirzner model actually arrives at something quite similar to the Stiglitz and Hutchings model. Is that right?
That's what they said.
Right.
Yes, yes.
And this is the Booth-Kirzner model that is based on your band spending patterns analysis.
Right.
So if we were to go backwards from here and start with the orange line, Stiglitz and Hutchings 60-40 approach. And if we were to assume that if we were to take the Booth-Kirzner human capital and the Booth-Kirzner consumption rate and the Booth-Kirzner approach to depreciation, we arrive back at your model 4. Is that right?
Probably. There's an interesting, as I said, I'm sure the straight math is correct, but you have to realize that what they've done is totally integrative. So you've got 3 factors occurring at once. Not only are you taking out the consumption, but you're removing depreciation and you're increasing the return on human capital. So I indicated that I was surprised at how large the impact of return on human capital, since it's only 9%, I shouldn't say only, but it was a fairly small number within the categories, why it would have a 40, close to $40 billion effect. And that's because it's also integrating the inflation and the depreciation factors. So it's multiplicative as a result. So the math may be correct, but logic would not be, in my opinion.
But is it correct to interpret this graph, this presentation? Would it be correct to say then that your model that's based on band spending patterns actually arrives at something, but for these factors that you differ on with Stiglitz and Hutchings, it actually arrives at something close to Stiglitz and Hutchings approach. Is that right?
Well, as I indicated at the start of my testimony, I believe that we all use, not all, but that we use similar models. It's just that the inputs were radically different. I'll use the word radically, were very different. So if you use the same, yes, we use the same approach of calculating annual rates of returns and then translating those into multipliers and then multiplying the multiplier by the NCRR each year, and then adding up the NCRRs. That's what we did, and that's exactly what Hutchins and Stiglitz did.
Thank you. Finally, Professor Kirzner, I wanted to take a look at that compendium again. This is Exhibit M, my friend's compendium. And I wanted to look at the case behind tab 2.
This is the compendium again?
This
Sorry.
is the compendium that was provided to you by Mr. Schachter, the one that's fallen apart is Exhibit M. And we're looking at tab 2, which is the Vipon case.
Yes,
And this is a case that you testified in
yes.
2012. Now, my friend, on page 6 of the compendium, has included a couple of paragraphs from that
Yes.
case. And one of those paragraphs included in the compendium is at paragraph 145, where the judge in this case, Justice Peppel, did not accept your loss calculations. Is that right?
That's right, but you have to read the whole decision.
Well, in fact, I've had my friend bring up some other, we have looked at the whole
That's
decision
the
and
case with all of these cases, is that you have to read the whole decision. It's unfair to pick out one or two paragraphs.
so let's take a look then. My colleague has brought up on the screen, you can see on the side there, this is the Vipon case. You can see the reporting, the case site is 2012 ONSC 7068, which is the same Vipon case that's included at tab 2
Yeah.
of my friend's compendium. And are there other aspects of your testimony that were accepted by the judge in the Vipon case?
No, my recollection of Vipond was that the judge found my testimony quite helpful, and particularly my discussion of, I mean, the emphasis of my testimony was on concentration and how quickly this account should have been cleaned up. And I gave a very strong opinion on portfolio management. The loss calculation was thrown in at the last minute, probably shouldn't have been thrown in, and it was really a throwaway in this case, but I wasn't even really involved in the damages calculation. The line's there, so I can't do anything about it, but you read this case in its entirety. I mean, I'm not looking to have judges say something's favorable or unfavorable. I certainly don't want to be impugned by a judge, but I think the judge found my testimony very helpful.
So I just want to bring us then to two paragraphs where I noticed when I read the case that there were remarks on your testimony being helpful. And the first one was paragraph 202, where we've highlighted, I accept Professor Kirzner's opinion. In addition, the concentration should have been addressed in a timely fashion. This here, you're speaking about the concentration issue you told us about. So here, Justice Peppel accepts your opinion. Is that right?
Right.
And then we'll move on. Then you're also mentioned again in paragraph 209, where Justice Peppel also accepted your opinion on tax smoothing benefits. You
Right.
remember that?
Yeah, I do.
Thank you. I think that concludes my questions and redirect, Professor Kirzner. Thank you.
Nothing arrived.
Okay.
I have a question for Your Honor. Again, I'm sorry, I keep doing that.
Yes, sir.
Since Professor Booth and I are both testifying, he's driving up this afternoon. Am I allowed to talk to him at this stage? What would you prefer?
Your evidence, sir, has been live streamed. He presumably could have been watching.
Okay.
Maybe he's watching right this minute.
Okay,
So your evidence is in the public domain right now. And in any event, you are excused and you are under no restrictions in any way.
okay.
All right.
Well, it's not my intention to go into any details with him at this stage, but he would have seen this testimony if he wished.
Absolutely.
Okay,
And Ms. Evans can, if he's missed it, she can bring him up to date.
okay.
All right.
Thank you.
Thank you very much, sir. As I have said to all the witnesses in this case, it is a difficult, complex, and for many an inconvenient case. And so for all that you have contributed and brought to it, particularly your respect for the process, we thank you. Thank you very much.
Thank you very much. I appreciate that.
So, council, we're breaking, I take it till Thursday. Or when, oh, that would be,
Tomorrow is Wednesday and we're right back.
what day was someone not available? Oh, the end of today. Oh, very good. Do you want to discuss my request for how you might give me a workable document, either electronically or on paper, of the spreadsheet that possibly does not have 2 times the alphabet number of columns? Is that something you can work out? What I can see as an excerpt from a spreadsheet, just like you make an excerpt from a text document? And we can go off the record.
Thank you.
Thank you.
Well,